Right. Yeah, good evening, everyone. It's a pleasure to be here this evening and then to share a bit of knowledge about forex trading. Right. I made a promise that I'll do this video a day ago, but something came up and I had to attend to it, so I wasn't able to. So this is um, a short video that I'm going to do. Going to explain what we call zones and then levels in the market and how to do with them, right? So that's basically what I'm going to do. And this is Young Wicks. Um, I'm going to be sharing a lot of content with you. So just so you don't miss out, hit the like button, subscribe to my YouTube channel, and turn on the notifications because I'm going to be drawing back to back videos for you all to educate you on some of the tips and bits or some of the things we usually overlook on the market. Right. So you can stay up, you can be well prepared for whatever is next or whatever is ahead of you. So in the next few seconds, I'll be zooming into um, what we're going to be doing today. So I'll just go straight to the chart. I'm not going to open any notes. I'm not going to open anything. I'll just jump straight into the charts and then we start. Okay, we mean business here. We're not here to joke. So we mean business, right? So I'll be starting the next 10 seconds and then we go. So we've been hearing zones, right? Or levels or market structure. What do we actually mean? One of the key things that I always tell people is that you need to understand what zones are, you need to understand what structure is, you need to understand what levels are. So what you usually do on the market is you look at this vast chart here, the gold chart, realize that it's just a giant thing running there. What are we going to do? How do we understand what is going to happen? That is what brings us to what we call zones, right? So then um, we are going to be talking about what things to be done um, today, right? That is basically what you're going to be doing. So I'll list down some points. Those are the things that you're going to be focusing on today, right? Um, After I list these down, I would actually name it three things to be done today, right? So the first thing is we're going to learn about zones. Yeah, so obviously what zones are and how to trade them very well, right? So the second point will be basically how to do it. Um, will be the importance of the zones. Yeah, basically that. So we talk about what zones are, how important they are to our first trading journey, right? Then the last thing is how to trade the zones. Obviously, what I mentioned earlier on, that's going to be basically the last thing we're going to be talking about, right? So we hear zones. Yeah, people say we have zones. This is my zone. It came to test in my zone, hit my zone, and went in my direction and the rest. What does it mean? Right? We hear a lot of people talking about zones. We hear a lot of people saying that zones are this, zones are that, levels are this, levels are that. What are all these things? What do they really mean? That brings me to my definition of what zones really are. Right? Because the chart is just a chart. It's just a bunch of either lines or candlesticks going up and down, running here and there, without giving us any much information, right? So how then do I understand what zones are, right? How then do I know that okay, when I see this on the chart, it means it's zones. When I see that on the chart, it means zones. When I do this, it means that. When I do that, it means that. How do I navigate my way around it? How do I maneuver my way? So that's where zones come in. So I define zones as areas on the market or on the charts or um, where major market decisions were made, right? Or where major price decisions were made. Either it's going to be reduced or it's going to go up. That's basically what zones are. Right. So I've actually written the definitions on the screens for you. Okay. So it is basically where price is decided. Right. So you can actually copy the explanations I have on the screens. Okay, just to give you a better insight of what zones are. Okay, so the zones are very important to note. Right. So how do I know that at this particular point in time, price decision was made at this particular point in time? People, those big players or those institutions or banks decided on what um, is necessary to be done about what the currency here or the that there. Okay, so we don't usually use points or I don't usually use lines. Right, when we talk of zones, they are area. Okay, or we can say they are the reactionary areas or points. We using points because sometimes you can use levels for it, but then they are the reactionary areas. Okay, so we focus on zones or the areas of the chart where major decisions are made. Right, we can't just go and then be at anywhere at all on the chart. We can't just point to any area that, oh, I have seen this candlestick pattern in the middle here. It means price going to sell, right? We will be what liquidated unless we are scalping, right? So how then do we stay cool? How then do we skip those processes? How then do we stay safe? That is where zones become very important. I know I was supposed to do a video on candlesticks first before I even do zones, but I realized that we need to understand zones first before candlestick becomes relevant. Because the candlesticks, not every candlestick on the chart is relevant, right? But the ones that appear as zones, those are the most relevant ones that uh, we need, right? So most of the notes, the basic notes that are needed are what I have actually written on the screen for you. You can look at them and then you proceed from there. Okay, these things are very important. Right, so keep note of them as we move on. All right, I'll explain what levels are to you so you get to understand what we mean by levels. But as I said, the zones are very hot important. You need to understand what do we mean by zones. Right. Um, when some when activities are being done, sometimes they have this zone, that zone, right? Which means that at those particular zones, those are the areas where things or important things are done, right? So we talk about zones. So I'll start by drawing levels, then I'll explain what levels are to you. All right. So look at this. Levels are the reactionary points. Zones will be the reactionary areas. So levels are the reactionary points, the points where major price actions were done or price changes done. So I usually draw them on the higher time frame, which is the daily time frame, for me to know where market is moving from and then where it's going to. Right. You need to know where market is starting its movement from and then where it is actually heading towards to be able to follow suit where price is actually going. So this is where I draw my levels. Right, realize that price is actually reacting to the points that I have what drawn the lines at. You look at the horizontal lines, every horizontal line I've drawn, you see the price reacting to it. All right. At those particular points, you see price reacting to them there. All right. So those are the things we need to take. So looking at the level right now, realize that price is reacting to all the points that I have actually heard. I'm actually marking. So this current level, see that price reacted to the left side and then also the right side, right? So more or less like a break and a retested zone, right? Then the next reactionary point is this area. See that price reacted to that side and then reacted to the next side and then before price broke out of that place. So those are the areas I'm actually looking at for reactions, right? The next reactionary point is there, and then the final reactionary point there. This one is here, and then we can have the final reactionary point as the extreme position. Okay, so this shows us what price reactionary points on the chart. So that's we have to take very note of, right? So this what I have drawn as what I refer to as what the levels, not what zones yet, right? So this is what levels, right? So as I said, you know that the lines that I've put on the screen or on the chart is what we call levels, not zones yet. Okay, so I've actually drawn what levels now. I'll draw the zones what later. Right. So they are what reactionary points, the areas or points where major decisions are made or market reaction what happened. Those are what we refer to as what levels, right? So they are points. Levels are the points. Realize that okay, at this specific point, price what reversed or price had a reaction or price changed its direction. At that specific point, something happened. All right. And the zones will be an area. All right. So I'll do the zones after this. So one of the things I want you to take note of is when you're starting, you can start by what drawing the levels, which we call what key levels. Right. Key levels because they are the area or they are the points where um market actually stop or the turning points of what market or the reactionary points of market. Right. So as I said, levels also determine the hot reaction points on the chart or on the market, right? So what happens as levels really actually tells us what is actually what's happening on the chart. Okay, so we need to take very good care when we are considering levels, right? It's important. It forms the basics of what drawing zones. It forms the basis of what knowing the points where price reacted to. Okay, so we need to take or we need to pay key attention to that. Alright. Now, our focus is now what our zones, right? How will our zones be um, coined from the levels that we've drawn, or how are we going to now mark our zones for the levels, right? As I said, the levels come first, then we look for zones, which are areas of what reaction. When price got to that level area, what happened? And then what happened next? So what happened would give us a clue of what's about happening next. And then what will happen next will also become very clear to us when price comes back to that zone or that area where there was a reaction initially. Then it will give us an idea of where price wants to get to. Okay, so up until the time that we get a second reaction on the first reactionary zone, we stay clueless or we don't actually anticipate anything. Okay, that will save us that thing of I expected it, but it didn't happen that way. Right. So we have to save ourselves from that by taking our mind off the fact that we know anything. Right? Until it happens, until there is a confirmation or something showing that okay, price is going to do this, we don't do anything. Okay. So why zones? Because price reaction have inaccuracies or mostly are not at a specific point, what we call spillage. So the reason we don't usually use the levels or the points is that if you realize the chart I showed initially, you realize that the lines are there, but sometimes you realize that price goes beyond the line and comes back inside before you see the actual direction of what market. That is what we call spillage or inaccuracies in price delivery, right? So this happens, and hence we need the zones. So the zones will actually cover those areas, will accommodate those spillages or those inaccuracies or those price fluctuations. Okay, that is what zones will do. That is why we need the zones. Okay, so now let's get into the chart and then look at some of the basic things that happen. All right, so we are now still considering our levels. So you look at these key areas, you realize that price reacted here. It's a level, right? Price reacted there before we saw a break to the upside. This side to price reacted. As I said, price will come back to confirm for us. Another reactionary point. Another reactionary point there. Then another reactionary point. We realize that price reacted at a level. It's not that it's different way. Right. See that price reactionary points are there. So these are the key things, right? So realize that price is reacting to all this area. So this is basically how price delivery is, right? So price will always react to specific points on the chart. Price will always react to those specific points on the charts, right? So So realize that, see, we went up, we played around the level, and as I said, price always has a decision to make or an area to go. You see, all the levels are playing major roles in the chart. So it's not everywhere that I'm considering, but the levels. So that's basically how you do it. See that price then went up, price then went to the upper side. Let me change the color and then the size of the the pen tool just so it becomes clearer so you see it very well. So you need to have an idea, you need to have it in your mind that levels are the most important things, but you also need the zones to be able to confirm the area where you're supposed to take the actual trade, right? You can draw the zone straight, but I have come to understand that levels play major roles in decision making on the charts, right? They play major key roles, right? So you realize that these areas that I circled, price were actually what reacting to them. You see, a rejection on that side before we saw what a downward movement. You see, yeah, that's realize that there was spillages around the area, right? There were spillages around that area, and then price moved from that spillaged area towards the downside. Okay, so that's basically how price delivery is like. That's basically how price delivery works like. Network difficulties, sorry, but then this is basically what market works like, or how you see that is it. You see, as I drew this thing, became a zone now, right? An area where it accommodates the spillages from what the levels. You see, so this would have given us a better idea of where to put our stop loss and then where to expect our TP to go to, and then where to expect the next reactionary zone or area. That is why you need to what, combine the levels and the zones, or that's why zones become very relevant or important. So you see the reactionary area, price also what reacted in that area. If we had used the level, would have been stopped out early before price what will pump up or give us the direction toward to the upside. So hence there's the zones or areas become very important. Another one there, realize that at all the areas price reacts to them, and then we see another major move happening. So we can be targeting the levels whilst keeping an eye on what the zone, right, where the consolidation actually happened on that level. That becomes the zone. So after that, you have the level. What happens around the level in the initial stage tells us what will happen at that level in the future, right? If we are, price gets there and then we see a reaction, like a reversal or a continuation, then we can join to the next level or to the next zone. You get it? So that's the reactionary area there. You see, that's this is what I call the spillages because it has gone beyond the level, right? So this is a spillage. I'll show you other spillages on the chart, right? So this is what the spillage is. You see that it's more of like price going beyond the level that's supposed to stop at. They are spillages. Other people will call them liquidity sweeps at the area. So the next spillage I'll talk about is that one to see went beyond the level a little. Then there's a reversal, and then we see the last one. That is one that we saw a lot of consolidations. Right? That shows us that spillages are hot, very very true or very very important or crucial on our charts. So that is also the final spillage that we know or we see on the chart, right? So these are the three basic ones that I would say they are spillages. Right, I've shown you just these three, but all the ones that you see that price reacted beyond those areas are all what price reactionary points. Okay, so let me just take out these things and make the chart look a bit clean, so we can continue our work. So zones are important, levels are important, but we need to know when the zones are okay and then when the levels become very important. As I made it clear earlier on, you can start by drawing your levels to know the specific points or um, levels where you're supposed to put your lines, right? Or where supposed to be we are supposed to have an area there, right? The zones help in determining those ones. Okay, so clear my chart. Then I'll go deeper into what the zones very well for you to understand. Right. So this is just a breakdown of how we could have spotted trades on gold, right, with just zones giving us at least not anything less than $1,000 per move. That is very huge. Um, I said $1,000, 1,000 pips per move. That is very huge on gold, and that can be made in short days. Right. I'll show you where one you could have gotten like 2,000 plus pips. Holding trade for just 4 days. Right. So that will come in. So realize that if I'm drawing the zones, this will be my first zone, which is still yet to be what retested. Right. So that zone is what still a very clean virgin zone. So we wait for price reaction on that area in the future. So then we draw the next zone. Realize that for that zone it has been mitigated by price. When I talk of mitigation, it means price has actually tapped into that zone, right? And that's what happened at the top there. So if I close the box, realize that there was a touch by that upward movement where we saw the engulfing candlestick coming in. Though price can touch it again, but let's keep it there. The reason I've reduced this zone is the two candles up there is what we call the tweezer top. It's a confirmatory candle that price is going to um sell. So I can ignore that and then focus on the candles below it, because when I go to high time frame, it will be a wick. So I can, though the wick is important, but the wick means he has already grabbed liquidity. So we can leave that and then focus on this one. Then this is the next zone. Realize that price reactionary point. It has actually contained all the spillages in price, and now price is at that area where it's actually trying to push down. Yes, so this is another hot reactionary zone for price. So you can do it. You can have this way. Yeah. So this is basically how price moves. Right. Zones. It moves from one point to the other. One point to the other. Now this is basically it. So we can focus on just these few ones. Then we can draw an extra zone down there, but I can focus on just these few ones and master it. Right. I'll go down to realize that gold is now trying to move from the upper part to the downside, then probably push up again or break for us to go extra down. Right. So it stays here for a while, consolidates, um, probably break through to the downside. Alright, after consolidation for a while, maybe a day, price can push back up, go into the upper part, extreme top, or price cannot continue downwards to the downside. Okay, yeah, as I said, the zones are playing their roles very well, the levels play their role very well. So you must understand how to draw them. This is what I see that it can happen on gold, a possible move on gold, right? From that current point, shooting downwards before it decides to come back up for another point or another entry or another push of market to the other side. Okay, this is what can happen. Alright. So now you can even see that there's a candlestick pattern or a chart pattern, sorry, that from this head and shoulders. So we have the left shoulder, the head, and then we have what you call the right shoulder. Right. So we can wait for the break of the neckline, the current candlestick situation. We can wait for the break of the current neckline, a retest, we shoot price down. So you just have to know where and then when price will react to a specific level or zone. This one we just drew our levels and then we knew where price was actually getting to. We knew what was actually going to happen on the charts. And then what do? We just took advantage of it and then we added our positions to it, hoping that price would not push downward or continue going down and down and down and down. And that's basically what's happening right now. Right, so it becomes very easier for you to know Yeah, okay, this is what is actually happening. When you know what levels are, when you know how to trade levels, when you know that okay, levels work this way, work that way, you get it. So this is basically what you're supposed to do. If you look at the charts right now, after the head and shoulders has been formed, all that we are waiting for is for price to push a little from the top there to break the neckline. Then after breaking the neckline, we wait for a retest and then we continue downwards. Okay, this is basically it. You don't need to know too much. You don't need extreme knowledge, or you don't need superficial knowledge, or you don't need to be that mysterious about trading to be successful. The most successful people on this chart here usually trade just support and resistance. Some of them just trade chart, use chart patterns. They wait for the candlesticks to get to their zone. That zone, they just um, look for, use the entry criteria, which will be taught in my mentorship if you subscribe to it. The plan is just $50 for premium. Alright, where you have lifetime access. We do the studies for 2 months. Then you get to enjoy setups as well. So yeah, now this is what's going to happen on gold. This is what I'm anticipating to happen on gold. A break of the neckline, a retest, then what, a shoot downwards. Then when you get to that first zone, you can either see a push to the upside, a breakdown again, and a push to the upside, or a continuation to the downside. Right. So as I said, that's the neckline. If it gets broken, we are heading towards the downside. We are going down, 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 down. Yeah, so this is basically what we're going to be doing. This is basically what we're seeing here. So when you look at the areas we have on the chart, look at this area for instance, look at this zone, realize that price was, after price moved away from that zone, price came back to that same zone and gave us what, a reaction, and then a push up was showing us that price has the possibility of going up, and then it went up. Now we decided based on our hot candlestick patterns, right? So with our candlestick patterns, you look at what is on the right side, you realize that when you zoom in, there's a candlestick like the doji. And as I've always been saying, dojis are used when we see the next, or becomes relevant when the next set of candlesticks point to a certain direction. So the color is not really important. Okay. So when you see it pointed to a certain direction, that direction, then we see series of candlesticks in that same time frame we saw the doji, showing that it is um, showing that the price is ready to go up. Then we join. Right, so you saw the doji when you come to the water and realize that after the area that we saw the doji was actually a point where we can take price from, and then there's a liquidity point grab just below that, just above that area, and then once price grabs that liquidity, we draw our on the engulfing candlestick that actually caused the liquidity grab there happening. You realize after that, price just moved above it, and this would have been our setup. Risking like $11 for like 206 or 208. Yeah, you get it. So this is basically how it's done. Just have to follow the streets rules, and you are good to go. Yeah. So this is basically it. Yeah. Yeah. So yeah, this is the basic thing that you have. The pretty basic thing that you have here, right? It's not anything difficult. You set your target very well, know where price is going to, where price will stop. Then what? You jump in. Okay. Jump in on the trade, expecting price to get to the extreme point, and then indeed see price really go to the extreme point, giving us like 200 pips, 2000 pips movement in that direction. You see, so this is basically price points on the chart. Alright. So this is what you need here. You don't need much. Something small, something pretty basic here, right? So the same thing that happens throughout the chart. So when you go to the other side, you see that the zone there to price reacted to that zone. As I said, on the daytime frame, it's just a week. On the lower time frame, you can see that's what a tweezer. So you just pick the trade from the tweezer. just below the tweezer or just the tweezer being entry point, or you can use your um, Fibonacci tool to mark, then see the area, the possible area for price to what sell from. Okay, now this is pretty basic. See, I have an engulfing after that area. I wait for price to come back into the L2 into the engulfing. See another block there. I just jump in it and I like doing it so you can see. Yeah, this is pretty basic. This is pretty the price goes down. All right, so this is basically how it is done. Not anything difficult, very simple, very understanding, right? Understandable. You don't need too much to know what I have done. In fact, you can with this you can make huge amounts of money. You can make so much. You can see price just came down around this area, then just rejected and go, and then that area, as I said, price reacted to that area there. So you can see you can mark from this whole area, this whole reactionary point here, then we extend it to that side, and then price actually what reacted on that area and price went up. So a reactionary point, another reactionary point to the south side, that small one, it's a reactionary point. Then finally price came back, so like a break and a retest happening on that area, and then price was shot up all the way to the extreme position again to almost at the area where we took our trade, right? And then price reacted and has formed a short head and shoulders there. So this is also an area. You realize that you could have taken another trade with this one, right? So this is basically it, and then that would have been a buy for us to the other side as the entry point of the stream. So this is basically it. This is basically, I mean, you don't need too much. Right, and go to lower time frame, we can reduce our stop loss here to a smaller time rather, just so we stay okay, we stay aloof and the rest, right? So this is pretty basic. This is pretty basic. I would like to end here, right? And then be dropping more content as time goes on. I needed to rush and then get this done for you guys, aside from this I have to deliver, so I decided to just put something together and then get you this video. All right, so I mean we get going. Right? We are here for serious business. So this is basically how to draw your key levels and then what your zones on the charts. So like I said, this is a key level, this is a lower time frame key level. That rectangular box is a lower time frame key level. I'll just wait for price to break it. When price breaks and they retest it, I can now shoot it down on the lower time frame. Until then, pretty the basic way of what trading. You need not to stress yourself, you need not to push too much, you need not to even do much, yeah. Just that, and we are good to go. All right. Thank you so much, guys, for the time, and I hope you enjoy this content. More content to be dropped soon. Don't forget to hit the like button, subscribe, and then turn on notifications so you get notified anytime I release a new video. Peace, ciao.